All right. So real estate professional status or real estate paper losses are passive in nature and cannot offset by active income. There's a lot of limitation. But if you unleash the limitation, if you can have a whole bunch of passive loss write-off, depreciation, cost negation, you could make it write off against non-passive income. That is, it'll break the dam. It'll create a floodgate of tax savings if you can potentially apply the real estate professional tax status, which is not easy. You gotta commit to the rules and regulations, follow the rules precisely, have your tax advisor to advise you along the way. You have to buy enough properties to make it happen. Otherwise, don't do this because the professional tax status rules are quite a red flag because so many youth investors, they try to get over on IRS and they don't meet the rules. They use the reps with the professional tax rules anyway. And ultimately, some of these people get audited. They didn't follow the rules intentionally. They think they can get away from the IRS, try to get over, and they get hit with an audit. And then their tax savings are crumbled. They're going to wind up upon an audit. The IRS agent deem that this particular taxpayer did not qualify for risk professional status, and they got caught, and then they have to pay back to IRS a whole bunch of money that they are able to claim using this scheme status. So don't go there. You got to do it the right way. You got to do it ethically, legally. Get some tax counsel appropriately. Make sure you follow the rules and just be ethical about it. And you don't have to scam the IRS just to push the button, engage in very unethical activity. So do it right because the rules are out there for you to apply the strategy correctly. And if you apply the rules as a risk professional, even under the case of a potential audit, you are able to survive the audit because you follow all the rules, you cross the T and dot the I's and have the guidance of a reputable certified public accountants helping you along the way to maneuver the minefield of the real estate professional tax status. So here are the basic rules to qualify. You must spend 750 hours in a real property trade or business. And number two, spend more time in real estate than anyone else. Thanks to number two, if you work full time, you are SOL. Do I need to spell out to you? SOL? S stand for, and you know what S stand for? All out, L luck. S out of luck. But there's always a workaround. What I mean, workaround? The workaround is I'll present you with 3 ideas to help you qualify as a real estate professional. Most important of all, you need, if you're single, you need to marry a potential real estate professional. Get married, make sure prior to the marriage, this person, this potential spouse, want to become a real estate professional to help you. As a single individual, let me save you any hardship. If you're single, you cannot meet the previous rule I just described to you. It is that simple because if you work full time, if you're single, if you work full time and you think you qualify for the 750-hour rules in a real property trade and do the work and document the hours of managing your property, which is equate to 15 hours per week, you're thinking you can do that as a single individual working full time? No, because you have to comply with the second rule, spend more time in real estate than anyone else. That means if you work full time, typically 2,080 hours per year, which is 40 hours per week. And the second rule applies. You have to spend equal amount of time doing real estate. That means 2,080 hours per calendar year. If you're single, you have to spend another 2,080 hours in real estate. So 2080 plus 2080 equal 4,160 hours. We're talking 80 hours a week to do both jobs, your regular job and the job of a professional based on rule number 2. I know I'm being a little bit technical. So therefore, at the end of the day, I'll just break it to you very easily. If you're single and you're working full time, you can never be a professional, although you might want to try to get away with it. If you get audited, you will suffer whatever the consequences, as I alluded to you a few minutes ago. Does that make sense? Do you read me loud and clear? If not, let me know. Raise your hands. That's how it is. That I'm just interpreting the rules as I see it based on my vast experience working the profession that I do as a real estate investor. That I am. All right. Again, how do you overcome that? Let's get back to the rule I just briefly shared with you. Ideally, you have a spouse, and that spouse works part-time at whatever job he or she has, or better yet, stay home, be a full-time homemaker. He or she have no job, not even a part-time job. Consequently, if this is a scenario, you will continue to work full-time, making tons of money, hopefully, the ideal world. So your working spouse can qualify as a rep, registered professional status, as long as that spouse, the non-working spouse, or the part-time spouse, as in this case, have the ability to spend 750 hours, which is 15 hours per week. And only then you guys qualify as registered professional status. Therefore, the benefit of that is, as I said earlier, any kind of taxable losses you can incur on any of all your rental properties, depreciation, paper loss can offset against your W-2 income without any limitation. Therefore, potentially reducing your taxes subject to your marginal tax brackets. That means you saving to the tune of $50,000 to $100,000 are not uncommon. 50 to 100 grand, dollar for dollar tax savings are not uncommon. If you are married, the non-working or part-time spouse become a registered pro and do the material participation, record, document 750 hours for the year, which is only a mere 15 hours per week. So this is a great strategy for high-income earners. Funnel your W-2 earnings into real estate investing, real estate. Have your spouse self-manage. You cannot hire a property manager. The minute you hire a property manager, you are not doing material participation. Your property manager probably can exceed your hours as a professional status hours. Does that make sense? You have to self-manage, which in itself, to me personally, would be rather stressful. I would never, ever, not that from day one, I never self-managed. It's brain damage. That's just me. Some people love the challenge of self-managing, do the dirty work, you do the hammer, fix the property. Maybe they live right next to the investment property in their own city, in their own town, in their own neighborhood. That's fine. You can do the dirty work and qualify for those hours. Me, I'm a remote investor. I treat my income property that I own across the U.S. like a mutual fund. Like a mutual fund, I look at the return. I stay out of the way. I let third-party people manage my property. And the property manager must send me a check every month. Just wire me my check. That's all I want. I stay out of the way. I enjoy my traveling full-time. It's just me. That is my little world. You have to define the way, what's in it for you. How are you going to do the work? How are you going to do your real estate business? When you buy income property, you can do it remotely. You can do it at the fingertips of your cell phone, your laptop, whatever. You don't even have to visit those properties because you already done your due diligence, you trust the team on the ground, whatever market they're located, you can buy turnkey cash flow properties in the best market from a turnkey provider on those markets, which I just mentioned: North Texas, Central Texas, South Texas, inside Florida, Central Florida, and then Tennessee, Alabama. There's some great teams, great turnkey providers that will do this long distance remote properties for you. So you can buy a portfolio of properties. In this case, if you're willing to do resident professional status, you have the motivation, dedication, then you can do it. Your spouse can do it. It's not that hard. So enjoy the tax savings. But important note, in order for this to work, your spouse must have a legitimate interest in real estate. You guys must have a passion. You guys love to do the work and you gotta go do the blood, sweat, and tears. One more, some few more ideas. Then I know you guys want to talk, but momentarily I see your video visual. That's fine. Great. So therefore, if you, assuming you live in California, some of you have a rental California, you might want to self-manage. So you buy a local property. In order to meet the 750 hours, let me give you a real example how you can do it. This is very strategic. Listen, you buy a local property, rehab heavy rental. If you want to turbocharge your rep election, you can buy rental locally so you can manage and do the rehab yourself. When you do the rehab and get down and dirty, you can easily accumulate 750 hours for the year, 15 hours per week. Maybe you need more than one rental. And the rest of your rental property, you can leave it out of state, long distance, take care by a property manager. To become a real estate professional, you don't have to self-manage all your 5 or 10 rentals. You don't have to. You can self-manage 2 or 3 rental if it's a rehab heavy rental, so you can document the material participation hours, 750 hours per year, 15 hours per week. And the rest, let third-party management do it for you, out of distance, whatever. To do this effectively, you have to work hard on one rental, meet the hourly test, enjoy the non-passive treatment on your other rentals, even if they're managed by a third party. But so run a separate real estate business. Many people think they can only obtain rep status by managing rentals. This is not true. There are 11 real property trades or businesses. Working in any of the 11 will accumulate hours that count towards professional rep status. You can combine time in all the real estate businesses you work in. Maybe you spend 400 hours as an agent. You can become a realtor and spend 400 hours as a realtor, real licensed realtor, then 400 hours as a property manager, self-managing, and do another 400 hours flipping some kind of property in your local area. And this total accumulation of 3 categories of hours can meet the 750 requirement. So there's a lot of creative way to become a real estate professional. Consult your CPA who knows those things. So in this case, you have 1,200 hours of real estate hours, way more than the 750-hour threshold. But you still have to meet one of the material participation tests on your rentals.